If you look globally, though, the adoption of stablecoins is nothing new. I mean, in emerging countries, if you go look at the adoption of USDT, that's obviously very retail focused. There was definitely a shift. Like we went from, 90-10 retail institutional, and now it's completely flipped on its head. It's 90-10 institutional retail.
Parker Edwards is a partner at Framework Ventures. The VC firm is working with Sky on Obex to deploy 2.5 billion USDS and bringing institutional grade yields on chain. In an exclusive podcast interview, Parker breaks down how it's deploying $1 billion in its first cohort across 8 companies, including structured credit, mortgages, energy, and AI infrastructure. What will Obex look like in, let's say, 3 years?
The best place for founders to come build. When USDS supply was at like $8.5 billion, and we're already $3 billion higher. Obex will be the bridge for people to access this on-chain liquidity. And sometimes when you talk to different people, it sounds more like an incubator. So I think it's going to just unlock a completely different style of projects being created.
Parker, thank you for coming in.
Great to meet you.
Yeah, it is great to meet you. I feel like there's a lot for us to talk about. And this episode is airing after we've been on stage at Digital Asset Summit. So, we're recording this in the past, but we are in the future in some capacity. Let's dive into maybe what is the big news of the day. Everyone's been talking about real world assets for years. And now we have Obex, which is backed by Framework Ventures and the Sky ecosystem, which is deploying $1 billion across areas like structured credit, mortgages, energy, and even AI infrastructure, to name a few areas. But let's start at the top. What is Obex and how and why is Framework involved in this?
Yeah, we launched Obex a couple months back. Today, we're excited to announce our first cohorts, 8 different companies, and we're deploying $1 billion into this first cohort. We have a $2.5 billion mandate to incubate institutional grade yield products within the Sky ecosystem. I guess for anybody listening that doesn't know much about Sky, maybe we can give a brief overview. Today, it's the 3rd largest stablecoin, just passed just over $11.5 billion in USDS supply just this past week. And kind of our mandate is to go get better yield products as just a part of the broader ecosystem. I think if you go look at kind of what like Spark and Grove have done over the past year or so, they've done a really great job of onboarding products, and it's time to accelerate that. And I think we're going to be a good catalyst.
Mm-hmm.
Yeah.
How did you guys get in touch with the Sky team?
So we made an investment into Sky a couple years back. Mm-hmm. And it's an ever-evolving ecosystem, but I think what Rune is building continues to be incredibly impressive. When we were approached about kind of administering this incubator just about a year ago, it caught our eye just because we have a long track record of investing in this space. And, we were one of the really early stage DeFi funds started back in 2018, 2019. And we also just happened to be quite hands-on with our portfolio companies. And so I think that this made a lot of sense for us to be involved here. Mm-hmm. But yeah, super excited.
Okay. You mentioned that there are these 8 protocol/companies that are in this incubator. It's Maple, USD.ai, Daylight, Centrifuge, Securitize, River, TVL Capital, and Better Home and Finance Holding Company. Mm-hmm. Why these 8 companies? And I think for some listener, they will recognize some of these names because some of them have come on the show, but some of them are very big, mm-hmm. right? So it's not like you're incubating or kind of backing smaller ones, right?
Totally.
Yeah.
So in this batch, we actually have a pretty good range of stages. So, companies like Securitize, Centrifuge, Maple, those are institutional grade, asset managers, tokenization platforms, and partners. We've obviously been big supporters of Maple for a long time, and they continue to be super impressive. And they've also been a big part of the Sky ecosystem for a bit. Same with Centrifuge and Securitize. Then we have kind of these newer players, let's call them, TVL, which is actually a company in stealth today. We have River, which is a project that we've been working on basically internally at Framework for the past 6 months or so, and they're going to be announced in this batch, kind of working on structured credit. And so, as we were evaluating what projects we wanted to incubate, the original thought was maybe we'll go after really early stage pre-seed type companies, but they're just usually not quite mature enough to go scale on day one. And I think that's kind of what the power of like Sky really is today, is unlocking scale across RWAs. And it just made sense to go and partner with people that that could take on this scale, and also just had like really deep domain expertise from the get-go. Something that kind of we're prioritizing today is integrating everybody into this risk framework that Sky has proven out over the last decade or so. And the best way to do that is with people that have existing assets. We're not, incubating net new companies across the entire batch, but each one of these partners will launch, a USDS aligned product, which we're super excited about. This mandate actually allows us to go bootstrap that product as well. So like when we talk to a Securitize or a Centrifuge and others, it's more about growing rather than kind of starting from zero, which I think is a better way to build today.
Yeah. So you called it an incubator though, right? So what does that actually look like in this context? Is it incubating these new bootstrapped like products with USDS, or is it something else?
Yeah. So it's a mix of two things, I would say. So one is we actually do have net new companies being incubated here, River and TVL being kind of the two that I'd highlight there. And then, we're also incubating net new products alongside these companies. I would say like Sky is having everybody integrate in kind of three main areas. One is on the risk side, one is on the technical framework, and then there's a legal framework that just aligns the ecosystem with these existing players. And so, it's kind of a mix of those two.
Yeah. How would you kind of describe the state of RWAs today? Because it's obviously a very hot topic and area.
Yeah.
We talk about it on the show a lot, and there's a ton of teams that are popping up on that front. So what is it about it that you think is maybe lacking, and then that you guys are really, really trying to drive home with this?
So I don't know if up until recently, people have been able to build RWAs that are called at institutional grade. And it's really just because the scale hasn't been there. And state of RWAs, I think, is, as everybody knows, this is pretty consensus that it's accelerating. I do think that you have just a different type of founder coming in, building these types of projects today. We're starting to see people that have, once again, like deep domain expertise. They're coming from traditional finance. They're wanting to access liquidity on chain. You're seeing a lot of these companies being built like traditional fintechs, just, powered by stablecoins is kind of the trend that we're seeing. I will say that state of RWAs is also being heavily influenced by the asset managers that, we're currently working with today. It's like, you go look at what Apollo and BlackRock are doing with Sky. I think we have over $1 billion deployed from the Sky ecosystem into these two asset managers. They are looking for products that fit their mandate. And this isn't a net new mandate for them. And so I think it's our job to go try to find the right teams and the right founders that can actually bring those types of products on chain, rather than like try to reinvent things from zero.
What is their mandate?
From
asset management firms.
Look, structured products. I think you're seeing a lot of that. Hot topic right now is private credit. I think everybody's trying to figure out kind of what's going on there. And I think this idea of building kind of like structured products and structured credit products specifically, doing things like ABS facilities, doing things like Daylight and USD.ai both are a part of this batch. I think investing heavily into energy and AI infrastructure is pretty interesting, and kind of this convergence of like AI, fintech, and crypto, I think is like this convergence that we're seeing play out in real time, and that's exactly what they're looking for today.
Yeah, when it comes to the areas like structured credit, fintech lending, energy, AI infra, tokenization, all these different things, I'd imagine there is a lot of demand in each of these categories. So maybe it's not fair for me to ask this, but what category out of all of these do you think actually scales the fastest?
It's a really good question. So before Framework, I built an energy fintech company.
Right.
And we've been working very closely with the Daylight team for a bit now. I think I'm pretty bullish on that industry as a whole. I'd say River is a pretty interesting project that we've been working on for the last 6 months or so, kind of integrating the same types of, warehouse type lending, ABS facilities into traditional fintechs that want to access DeFi liquidity. I think you're going to see a lot of scale there here in the next 3 to 6 months. I'd probably highlight those two today.
Yeah. There's also a lot of talk around yields, and I feel like I'm always talking about it. You're probably always talking about it. And I think the move for this also comes as part of like a bigger push to bring in more forms of yield to Sky, correct? So how do you kind of see this accelerating that?
Yeah. So for anybody that wants to go see what Sky is currently deployed into, you just go to info.sky.money. And the nice thing is you can literally just like click into what each star is participating in. I think traditionally it's been a lot of on-chain lending. Grove started to work with people like Centrifuge and Securitize to do things more on like the RWA institutional side with things like the JAAA CLOs that they were deploying into, things like the Apollo fund through Centrifuge. I mean, I think it's time to expand that. It's more about finding the right teams that can actually underwrite the assets that they're trying to bring on board. And I think that's kind of the challenge that we've been given, is to try to find that. I can tell you that if we succeed here with these 8 companies, I think, one, we obviously will drive more yield back to the ecosystem. Today, if you go deposit into SUSDS, you earn about 375 bips today. Our mandate and our goal is to hopefully bring that up. As inflows come in, hopefully we can match that with the assets that also match that. So yeah, that's kind of my thought there.
Yeah. Have we seen this done before? Like, has there been an Obex equivalent out there? I feel like not really. No?
I don't think anyone's ever tried this at scale.
Yeah.
No. I don't think anyone's ever really went into a market and said, let's go deploy, $2.5 billion, $1 billion starting with this batch into these types of yield opportunities.
Yeah. So $1 billion is going towards these first 8 projects out of the 2.5 billion mandate that you mentioned.
Correct.
So then walk us through how you kind of size the allocations here, and what does that pipeline actually look like for the remaining $1.5 billion?
Yeah. So this will be a dynamic allocation, meaning depending on market conditions, depending on what assets are originated, we were able to deploy in and out of different assets in real time. It's actually kind of the nice thing with Sky is not only are we able to, come in and out of different assets, but we also are re-underwriting the assets as well. So is Sky today. And so we aren't committing to a specific number into each, but I mean, look, I think that there are certain industries that require a bit more capital than others to be able to get into things like AI infrastructure. I mean, I think a couple of people have tried without size and it hasn't worked. And I think the way that I view it is we can finally unlock that kind of with this initial deployment.
So across the 8 teams, it won't be necessarily like evenly distributed.
Exactly. Yeah.
Okay. And leaning heavily into certain categories like AI?
Yeah, I mean, I think we're going to lean pretty heavily into AI, energy, and structured credit. Structured credit is pretty broad. I mean, Better is a part of this batch. They're doing something very interesting with originating mortgages. Centrifuge and Securitize both bringing very interesting products on chain. And so is TVL. Today we're actually deployed about $600 million into syrup.
Maples.
Into Maple. I don't see that changing. I think if anything, we look to scale that up. We have a lot of room to play with.
Amazing. You've also mentioned that we're moving beyond, quote, circular DeFi yield. What does that actually look like in practice?
I mean, for the first time, we have real cash flowing assets coming on chain. We're not having to go and incentivize depositors with yield that isn't actually generated from the assets themselves. I think you're starting to see, things like, let's talk energy lending, for example, that are much higher yielding than, over collateralized lending against Bitcoin. But I don't know if anyone's ever been able to accomplish something like that with the scale required to pass that back entirely.
Why do you think that is?
It's a good question. One, I think the capital just hasn't been there until recently. I mean, you're sitting on right now a couple $100 billion worth of stablecoin liquidity that is just sitting idle. So that's net new. I think you have institutional type depositors coming in for the first time. There's a mixed views on regulation. I actually think a lot of the founders that we talked to today are excited to at least just know the rules that they're playing with. And I think that goes for the allocators as well. Mm-hmm. And so we're just more mature than we used to be as an industry.
Yeah. I feel like that's also just being shown with this cohort too. It's not just all early stage, throwing something at the wall and seeing what sticks type of projects. These are pretty established aside from the first two that are younger, so to speak, right?
Yeah. I mean, for the first time, I think you're seeing people be able to compete with banks and credit funds. Mm-hmm. Yeah. I mean, that's never been the case. There's always been this idea of adverse selection across DeFi. You're getting the bottom of the barrel type assets. You're getting the stuff that nobody wants to touch. And for the first time, I think that's changing. I actually think you're starting to see the same assets that a JP Morgan and Apollo, somebody like that, they're actually starting to come in and participate. And I think that's just net positive.
Mm-hmm. So if they're participating, it's not necessarily they're getting nervous about this?
I mean,
or should they be nervous?
Yeah. One of the advantages of building a startup is being able to move quick.
Yeah.
I don't think that goes away anytime soon. Mm-hmm. I still think that, people that are super verticalized and to deploying into assets that, they can underwrite and originate themselves, I think gives people an advantage. But I also just think you're seeing these people, instead of saying, hey, let's go compete. I think for the first time you're seeing them actually saying let's just be a part of it. I was talking to Apollo a couple weeks ago, and they're eager to be involved in this industry rather than being scared of it. Mm-hmm. And that's pretty bullish.
How can they Apollo, for example, or maybe another firm like that, how can they meaningfully actually be involved with Obex then? Is that something that you guys see, or it's kind of you're having conversations outside of this? I mean,
so we'll use Centrifuge and Securitize. They're currently tokenizing their products.
Right, yeah.
Apollo and BlackRock. I don't know the exact sizing, but we're deployed at least a couple $100 million into Biddle today through Grove. Mm-hmm. We're also deployed into Apollo's funds as well. And I see that relationship growing rather than going away, for sure.
Yeah. And what is it that they want to do on chain? And I feel like I asked this question to so many people, but I get different varying answers. So I would love your take too on that.
Yeah, I think it depends on the asset manager. I mean, we're seeing a lot of people trying to get involved, creating new types of CLO products, lending products.
Yeah.
I actually think we're gonna have a couple, announcements on this over the next 3 or 4 months, especially as we start really working with, TVL, Centrifuge, and Securitize on a unique batch of products. I think what kind of really matters here is these products are actually going to be deeply ingrained within the Sky ecosystem. There will be, deeper risk reporting requirements. There will be a more ingrained technical infrastructure. And for the first time, if you're an asset manager and you want to come work with someone like Sky, you're not working from zero. The goal here is to actually build a framework that they can come and plug into, that is scalable over time. And, we also have the capital to go back that as well,
right,
which I think helps.
In terms of future projects that would be a part of Obex, I think a question I have on the front of the River and TVL capitals of the world, because those were two of the smaller or emerging ones opposed to the rest. How did you guys kind of determine what a quality earlier stage startup looks like this? Because I think with more established ones, you could see the numbers, you could see kind of the traction, but with earlier ones, as the case with many venture investments is you're really making a bet on them, right?
Yeah, I mean, I think it's not that much different than just taking a traditional venture bet. I mean, we're evaluating a team. TVL is currently in stealth, but I can speak more on River. The founder of that project has been working in structured credit for 12 plus years, has underwritten billions of dollars in transactional volume, and also was previously at a tier one fintech. So when he says, hey, I want to go do something, very similar and solve the exact problems I've been seeing over the past like decade plus, that's pretty attractive. I think where I get a little nervous is when I have a founder, come and pitch and they don't have the domain expertise. They don't have the ability to underwrite the assets that they want to originate. That is where I get a little bit more nervous, but I think it's a bet on the team at the end of the day.
Yeah, for sure. I also know that the Sky Frontier Foundation reported that Sky's revenue was at $435 million last year, and with a target of $20 billion in stablecoins by the end of 2026.
Yeah.
The revenue number is pretty wild because a lot of companies in crypto don't hit
it's Sky and Hyperliquid.
Yeah, Sky, Hyperliquid. I actually had I spoke with Rune recently, and he was saying Sky, Hyperliquid, and I think Pumped Up Fund, but anyways, moving on. I guess contextualizing those numbers, where does Obex fit into that growth story? Yeah. And with the $20 billion target by the end of 2026, do you think they're going to hit that?
Yeah, I'm not exactly sure what I'm allowed to say as far as a prediction goes, but I will say that I fully expect. I have a lot of confidence in the Sky team to hit those projections. I also just think we're kind of like the catalyst to make that happen today. Just look at what's happening over the last month or so. You've had billions of dollars in inflows into the ecosystem. You see the stablecoin supply also rise as a part of that. And I think with these net new products, you're going to see the continuation of that. My goal for Sky is to make USDS growth look like a hockey stick. And I think the best way to do that is to bring the right assets into the ecosystem. And also, we have so many great partners that are also kind of a part of this, infrastructure partners that will announce, build partners, and also just I feel like we get to be super hands-on with the project in general. And so, hopefully we can play our part, but I feel pretty good about what the SFF have put out there.
Mm-hmm. Do you see it ultimately replacing the Tether and Circle's USDS and then USDT?
I think that they play different roles. USDT, I just spoke about this today, actually, going to the USAT launch a couple months back here in New York, to hear Apollo speak about, their impact across the world, their ability to make an impact like that, I think is not something that when I say we, just Sky intends to go replace. I think if anything, I think USDS gets to be kind of the best savings product is kind of the way that I view it. And I just think Circle and Tether are just playing a different role. But as far as yield coins go, I'm pretty confident that Sky takes the cake there. Yeah,
I guess that makes sense because it really isn't going to that category as much as just being a peer-to-peer dollar transfer, right?
Well, even right now. So if you go look at the inflows over the past 3 weeks or so, there's a bucket of capital called the Peg Stability Module, and that's basically where the stablecoin supply lives within Sky. So nice thing about Sky, you can actually 1-to-1 deposit in and out of USDS instantly. And you're able to do that because of this PSM. And traditionally PSM, if you go look at kind of supply, it's been 3 or 4 billion, and that's shot up quite a bit over the past couple weeks. And it's actually coming through Morpho today, and it's actually in the form of USDT. And so I think you're going to see these ecosystems collaborate a lot more than compete. Actually,
yeah. Why do you think this whole shift is happening now? Is it a product of maybe the regulatory environment changing?
The shift in
the stablecoin adoption and everything, and USDS really growing, and the numbers I mentioned before even.
Yeah. So I think the growth is is twofold. I think one, people are kind of finally waking up to the power of, just-in-time funding on cash flowing assets. You have like Jamie Dimon on, CNBC talking about stablecoins. So I just think you have the attention of a lot of big players. And I also think that the quality of the projects is just getting so much better today, where, for the first time, people can actually trust these ecosystems and the collateral backing them. I think Circle performing how they have in public markets probably plays a role. People have definitely paid attention after seeing that growth. I mean, I would say that in the US, we're definitely kind of waking up. If you look globally, though, the adoption of stablecoins is nothing new. I mean, in emerging countries, if you go look at the adoption of USDT, like literally products are denominated in USDT. And, that's obviously very retail focused. The shift is like institutional level players are now coming in and starting to participate more than just pay attention. Back in October when we had 10-10, there was definitely a shift. Like we went from, 90-10 retail institutional, and now it's completely flipped on its head. It's 90-10 institutional retail. Mm-hmm. And people are just kind of forced to wake up, which is great.
Yeah. So if everything goes according to plan, what will Obex look like in, let's say, 3 years?
Yeah. I mean, I'd like it to be the best place for founders to come build. That's obviously pretty broad. I mean, look, if you're going to build a financial product, like this is the place to do it. I think this mandate expands as USDS supply continues to go up. Mm. Just pointing out this $2.5 billion number that we threw out there, was given when USDS supply was at like $8.5 billion, and we're already $3 billion higher. Mm-hmm. So I think, Obex will be the bridge for people to access this on-chain liquidity. And, sometimes when you talk to different people, it sounds more like an incubator. Sometimes comp it more to like a credit vehicle. Mm-hmm. I don't know if anyone's ever been able to execute on a venture style program paired with this type of liquidity before. And I think it's going to just unlock a completely like different style of projects being created.
Mm-hmm. So if it's at that $2.5 billion mandate right now, if USDS continues to grow, will we see that number get bumped up?
I think you're just going to see everybody allocating more capital in the ecosystem. I think, we'll have the ability, Grove and Spark will have the ability. There's other primes that are going to come online at some point that have already been approved through governance that will also, drive these numbers up. Mm-hmm. So yeah, generally, I feel like we are going quite quickly.
All right. Last thing, Parker, can you leave our listeners with a piece of advice?
Yes. If you're, I guess not financial advice, but
sure.
Yeah,
none of this is. Yeah.
Yeah. If people are looking to access yield that is diversified, just go check out, USDS and Sky. And I would argue that SUSDS is one of the more interesting products to go check out today. And we're hopefully going to help play our part to make it grow.
There we go. Amazing. Well, Parker, thank you so much for coming on, and congrats to the team.
Thank you.
Yeah.